Good morning, all of you. I am Dr. Urmila Gite from Maratha Vidya Prasarak Samaj, Srimati Vimlaben Khimji Tejukaya, Arts, Science and Commerce College, Devrali Camp. This session is for MCom first year student, semester 2nd. Subject is Financial Analysis and Control. Topic is Fund Flow Statement. In last lecture, we are already discussed about the introduction of budgets, preparation budget, how to prepare the budget, and the various types of budgets like master budget. In master budget, we learn how to prepare profit and loss account, trading account, and balance sheet. And purchase budget, the format of purchase budget, sales budget, fixed and flexible budget. It is the fixed and flexible budget in number of problems we already solved, and zero budget and cash budget. Now, in this session, we are going to learn the meaning of fund, various uses of fund flow statement, need of fund flow statement, what are the different advantages of fund flow statement, and rules for preparing while we calculate the sources of working capital and application of working capital, what are the different steps for preparation of fund flow statement, and the format of changes in working capital. Now we are turned to fund flow statement. What is the meaning of actual fund? Fund means cash, and the statement based on this concept is known as cash flow statement, because cash flow statement is very important because the cash inflow and outflow, what actual cash comes in and actual cash what goes out. Fund means all financial sources which flows through working capital and fixed capital. Sources means cash income, and outgoing the cash is the sources of funds. And fund means working capital is equal to current assets minus current liabilities. Current assets means debtors, bills, receivables, cash balance, bank balance, etc. And current liabilities is bills payable, creditors, loans, and after that we are going to learn the meaning of fund flow. Fund means incoming of funds from different sources. It means movement of funds like incoming and outgoing. It is the very important concept because the movement of fund means movement of cash, what is actually cash comes in and actually cash goes out. That is the incoming and out sources of money. Next is fund flow statement shows the changes in funds between two balance sheets of two different dates. While given the problem of the university, the two balance sheets are given for comparison with two different dates like 31st December ending 2020 and 31st December ending 2021. That is the two different dates for comparison of two balance sheets. The next is it is the statement of sources and uses of funds. It means which cash comes in, that is the sources, and uses of funds, that is the application of money. Next point is use of fund flow statement. Uses of fund flow statement means it acts as a tool for allocation of financial resources. Allocation financial resources, it means it is actually allotted by the department or company to the individual financial resources departments. Next is it is test of effective use of working capital. Working capital is equal to current asset minus current liabilities. This is the effective tool for the company. It answers complicated questions. While questions arise from the company for complications, the working capital always answers the resources of actual cash inflows. It describes the financial position of the business operations. The detailed study or detailed money or detailed cash balances, bank balances, what actually debtors, what comes in, what goes out. The financial statement shows the detailed information from the fund flow statement. What are the different advantages of fund flow statement? First advantages is it is the used as a tool for financial analysis by financial institution, the management, the investors, the bankers and the other parties to know the changes in financial position, because they have right to know the actual position or actual financial condition of the particular that company. Fund flow statement can play a role as a control device to make the financial planning, because without planning no one can manage or no one can control the device to make the financial analysis. Shareholders can also an idea about the financial health of an organization. Shareholder, it can be equity shareholder or debenture holder or preference shareholder. They have idea about the financial health of the organization. It is the profitable or loss. It can be shareholder know that. The liquid position and the supplier of the raw material can be reviewed. The liquidity in the company or what is the position of cash and supplier of raw material can be reviewed. It means what amount should be given to the raw materials or suppliers. It is also very important for the company to know the fund flow statement or an advantage of the fund flow statement. The requirement of the funds availability and when required manager can ensure the required amount is sufficient for the company or availability when required is also very important for the management to ensure that the money is available or not. This is the advantages of fund flow statement. Next point is rules for preparing the statement of changes in working capital. What is the rule for preparing what kind of rules for preparing the statement of changes in working capital? First rule is increase in current asset. What is the result in the increase in working capital? The current asset while increase, the result is increase in working capital. It means the working capital increase in current asset, and current asset it means cash balance, bank balance, debtors, bills receivable is the current asset of the company. Second point is decreases in current asset and the result decreases in working capital. While calculation the working capital or changes in working capital, the effect should be minus or decreases. Third rule is increase in a current liability. Result is decrease in working capital. It is the opposite figure. While current liability is increased, the working capital is decreased. And last point is decrease in a current liability. The result is shown in increase in working capital. It is the vice versa effect. Next point is step in preparation of fund flow statement. What are the different steps? One step is completed. After that, second step is finalized. The first step is preparation of adjusted profit and loss account to find out funds from business operation. This is the first step or first stage to finalize or adjusted or prepare the financial position of the profit and loss account to find out the funds or availability of funds or sources of cash from the business operations. Second point is preparation of statement of changes in working capital. First, we are seen in the profit and loss account and prepare the adjusted profit and loss account. And after that, second step is preparation of statement of changes in working capital, which is going to shown in next slide. Third point is determination of other sources and application of fund. Means what are the different sources of money and what are the applications of received fund. That is the three steps in preparation of fund flow statement. This is the statement of changes in working capital and format of statement of changes in working capital. This is assets and liabilities, previous year, current year, changes in working capital, increase and decrease. First is current asset. Working capital is equal to current asset minus current liabilities. So these are the current assets. First current asset is stock in trade, previous year balances and current year balances, and the difference shown in changes in working capital, it can be increased or it can be decreased. Second point is current assets is debtors. Debtors last year balance and current year balance and difference is shown in the changes in working capital. Third point is cash balance. It is also previous year's balance compared with current year balance and difference is shown in the changes in working capital. It can be increased or it can be decreased. Third, next is bank balance. Bank balance is also last year's balance compared with current year balance and changes shown in the working capital. It is decreased or it can be increased. Same effect in prepaid expenses. The last year prepaid expenses compared with current year prepaid expenses and the difference is shown in the increased or decreased column. And after that, we all these current assets is added in current asset, and this is the total asset of previous year and this total of current year. It is compared with last year and this year. Second point is current liabilities. Current liabilities means sundry debtors, outstanding expenses, bills payable, bank overdraft, loan from bank. These are the current asset. Current assets effect is vice versa. It means the effect is change in the decrease and increase column. The last year or previous year balance of sundry creditors compare with current year, and the difference between the both balances is in increase or decrease column. Second point is outstanding expenses. Outstanding expenses is compared with also last year and current year balances, and differences shown in the changes in working capital in increase or decrease column. Bills payable and bank overdraft is same effect like sundry creditors and outstanding expenses. It is also compared with the last year and current year balances, and difference is mentioned in the increase or decrease column. After that, we are going to total the current liabilities. This is the total of current liabilities, and net working capital, current asset minus current liabilities, is equal to current net working capital. And increase and decrease in working capital shown in the last column in this side, and total of 4 columns in the statement of changes in working capital. And this is the format of sources and application of funds. The sources means the incoming of cash, and application means outgoing of cash. What cash actually comes in and what cash actually goes out is the actual effect of cash is shown in the sources and application of fund statement. This side is sources. First is fund from operation. Second is issue of new share capital. It means the company issue the new equity share and collect the money against the new equity share capital. Same effect of issue of debentures, long-term borrowings, sale of investment, sale of fixed asset. Sale of fixed asset like sale of building, sale of vehicle, sale of furniture, collection from sales. After that, dividend received, increase in working capital is and non-trading receipts. These figure increase, decrease in working capital is this figure is collect from the sources and application from changes in working capital. This side is application side. First application is loss from operation, payment of dividend, purchases of different assets, payment of different types tax like GST, VAT, advance tax payment. Next is redemption of shares, redemption of debentures, payment of long-term debt, increase in working capital, and purchases of investments, non-trading payments. These sides is application side, which is money actually goes out, and total of these both side is tally. After that, we are going to learn the actual practical problem on fund flow statement. The following are the comparative balance sheet of Akash Limited, Agra as on 31st March 2020 and 31st March 2021. This is the balance sheet. Liability side, equity share capital 70,000 and 74,000 in 2021. 7% debentures in 2020 is 12,000 and in 2021 is rupees 6,000. Bills payable in 2020 11,660 and in 2021 is 11,840. Trade creditors in 2020 5,740 and 21 6,360. Profit and loss 4,000 and 5,000 in 2021. This side is liability side, and this is the asset side. First point is given in the problem, goodwill. Goodwill as on 31st March 2020 is 10,000, as on 31st March 2021 is 5,000. Building in 20,000 and 21 30,000. Stock in trade 49,200 in 2020 and 42,700 in 2021. Trade debtors 14,900 and 17,700. Bank balances in 2020 9,000 and 2021 is 7,800, and the total of balance sheet is in 2020 1,03,100 and in 2021 is 1,03,200. Now we solve the statement of changes in working capital. The column is, first column is particular, second column is in 2019-20, second column is 2021, and fourth column is changes in working capital. It is decreases and increases column. First is calculation of we already seen the format of changes in working capital. First point is current asset. It is the current asset calculate. Under this point we are going to calculate the stock in trade. In 1920 the stock in trade is 49,200 and in 2021 42,700. The difference of both balances is 6,500. We are mentioned here because the 49,200 and 42,700, the difference is increase or decrease, but the effect of 49,200 minus 42,700, the amount is decreased by 6,500 and we are going to take it or mention in decrease column. Second point is trade debtors. Last year trade debtors is 14,900 and this year, current year, it means 2020-21 is 17,700. The amount is increased by rupees 2,800 and mention increase column. Third point is bank balance. Bank balance in 2019-20 is 9,000 and 2021 is 7,800. The amount is decreased by 1,200 and mentioned in decreased column by 1,200. This is the total of current asset 73,100 in 2019-20 and 68,200 in 2020-21. Now less the current liabilities. Which current liabilities? First is bills payable. In 2019-20 the bills payable amount is 11,360 and in 2020-21 is 11,840. The amount is increased but the effect is in column the decreased because the vice versa effect of current liabilities. Second point is trade creditors. Trade creditors in 1920 is 5,740 and in 2020-21 is 6,360. The effect is same vice versa 620 by decreased. This is the total of current liabilities. Total B 17,100 in 1920 and 2021 is 18,200. The net working capital of current asset minus current liabilities is 56,000 and 50,000. It is given from the 73,100 minus 17,100 is equal to 56,000. And in 2021 the current asset is 68,200 minus current liabilities 18,200. The amount given in the problem in working capital current asset minus current liability is 50,000. The last year current working capital in 1920 is 56,000 and this year 2021 is 50,000. So the working capital is decreased by rupees 6,000. This amount is very important while calculating the changes in working capital. Now we are going to student assignment. This is for you. What is the meaning of fund? What are the various advantages of fund flow statement, which is already seen in the last slides. Various advantages of fund flow. You can write at home in your notebook. Draw the format of changes in working capital. Draw the format of sources and application. You can also draw both these formats. Now this is the summary time. Which points or which contents we learn in this session. First point is meaning and introduction of fund flow statement. Second point is uses or needs of fund flow statement while calculate the changes in working capital, sources and application, appropriate profit and loss accounts, different various advantages of fund flow statements, which rules for preparing follow for while calculate the statement of changes in working capital, which steps follow the preparation of fund flow statement, and statement of changes in working capital. These points we learn in this session. Now we are going to learn in next lecture the ratio analysis topic, meaning, introduction, importance, advantages, limitations and uses of ratio analysis, and number of problems solved on ratio analysis with different types of formulas of ratios and trend analysis. Now, thank you.